Hey, what's going on, guys? I'm gonna be reviewing the trades that I took throughout the week. Pretty boring week, but I feel like I was in the right areas to be able to survive and set myself up for the best risk possible with the charts we were given. We had a lot of ugly-looking charts in tech, and that's basically all where I played at this whole entire week. We had this bear gap that was sitting up here in QQQ at 508.69. We were playing with this previous swing high, and then I've talked about, guys, how a lot of the progression has been stalling within tech, within from an indice perspective, from just the perspective of the daily chart on the Nasdaq, right? We have a lot of internal range buildup, right, where you're getting these um, higher lows after higher lows after higher lows into these breakaway gaps followed by a sell, right? There was decent volume on those breakaway gaps and then everything dried up towards the top of the range, hinting that this thing is not really ready yet and it's more or less just exhausted. And then we're going to pull back a little bit, maybe fill the gap, find a lower high, pull back into the bottom of these gaps before we get into those strong seasonal flows into December once again. So with that being said, that was basically where my focus was as far as looking at some tech stocks to short. This is also the time of dispersion where you're going to get a lot of the leaders kind of giving up a little bit of gains, showing their hands in terms of looking for some pullbacks to balance themselves out on the charts, and then obviously look for maybe a leg higher after that. And that was where one of my primary trades was for the week. This wasn't any sort of full size heavy trade. I tried to stay away from full size on the week just because it was a holiday week, short week. Obviously, this is a little small window where we could see some weakness and see some pullbacks. And Tesla was really showing that off actually last week. I'm sorry, the start of this week, and basically last week as well. So one thing that I did put on the focus was that this saw very, very, very large volume on almost a neutral spread. Obviously, this is favoring buyers just because it's plus 9%. This is obviously something where, you're getting a lot of buy effort up here, but it stalls at the top of this trend, right? You get most of your volume actually off of 930, and then there was a failure to progressively move up above that orb, and we found a top. There was a lot of volume on that top, and then it started to sell off and just stay relatively quiet into the rest of the day, right? And then we got our slight little pullback. That pullback was probably just into some sort of EMA on the daily. Yeah, right into your 9, really in the middle of nowhere, just basically off of this 2022 resistance area, which I don't really care about. And then we started to obviously push our way higher once again with really tight consolidation, 3 inside bars, lower volume. That for the time being was favoring continuation. And then once we got that continuation, that's basically the continuation. When you're reading that and you're looking through the tape and you're looking at the price action and the volume, you're basically able to see how much effort and how much fuel essentially buyers have that are breaking through this 4-day consolidation period that we have here on these 3 inside bars, right? So whenever I saw this and I go into my smaller time frames and I look at the gap beneath us, I look at the pullback, I look at these inside bars, and then I look at the expansion, I see pretty heavy volume on that expansion, but it's all just into a new high where we have another increased volume with a shooting star in the 15 followed by a lot of consolidation into the close on pretty decent volume as well, right? So we can conclude that this candle up here is a big candle to absorb because we swept the previous high on decent volume, 15-minute shooting star with 5 million volume, and then we consolidated into the close on relatively low volume. The next following day, however, we got a slight gap up, which swept the previous day high. And when you sweep the previous day high on a ton of volume and you start selling on a lot of volume and finding these subsequent lower highs on a lot of volume, that goes to show you that there was a seller that was participating in the name over here who was continuously participating on the sweep and failure of the previous day high, right? So this could have been a beautiful short side trade, risking the orb high or the pre-market high or just this previous day high, all just in the same general area. And I never caught this, and I wanted to catch this. It really caught my eye that this was a really gross looking wick that happened over here on the this was a really gross looking wick that happened on the daily chart over here from Friday, right? And then obviously into that Monday was basically the telling sign that this thing needs a little bit of a pullback, right? So we're going to start targeting more so all of this liquidity that remained off of the inside bars, which would be all of these consecutive bar by bar higher lows that were sitting throughout this compression that led to the expansion, then led to the failure. So now the new draw is going to be lower into some of these daily wicks that are sitting basically in the mid 330 range, and then we have a bull gap to test down into 330 flat, right? So this was a short little week where we could definitely see that sell. There wasn't a lot of volume on the sell by any means, but we have a leftover bull gap sitting here, and then we have failure essentially off of this expansion out of these three inside bars and this 4-day compression, and then obviously we break back down into that range. Basically, that outside bar that was swallowing those 3 days of price action were all failed off of, and obviously we actually sold underneath that the next on Monday, right? And then we had a really weak close. So what my trade was I was just looking for simple pullbacks, and I was really looking for 350, right? And the reasoning behind that was if you go in the extended, I'm basically just looking for a discounted put premium high or low, which would be off of like 348.60 to 352. But I also did figure that we had a major gap level here that was lost, and obviously all of this previous daily resistance that led to the breakout out of the inside bar range. So I took some size off of 346.30. I talked about it here on Twitter as well. I bought a few cons once I started to see the rejection, and then I bought some more on the lower high. And my risk was basically off of the top of this wick at 347-ish. And then I started to see a lot of failure and a lot of bids pulling and just a lot of aggressive market orders that were absorbing bids. I started to see a little bit of intention with just how there was an active seller in the tape and he wasn't really stopping. Everything kind of was a dud into the close on this day. And then I said, you know what, I'm going to swing a fifth of these, and then basically what happened was we opened up the next following day, saw a sell right off of the opening area, and then we saw really nice compression that was basically basing underneath 340. So our level to lose was just this low over here, the previous trading session low, which really wasn't too relevant. It was more and less just losing this low. If you go to the daily chart, it's basically that breakout candle low that had the decent volume behind it, and then we could start targeting, like I said, all of these wicks out here that are swallowing the wicks within the range of like almost like these are all just like outside bars that are basically just a draw to the downside. Um, if you can't if you can't claim above 346.30 and you start rejecting those areas, we have a gap beneath us. Like I said, there was a lot of targets in mind that made this a good risk to reward trade, and if you go to your risk to reward, it's a really nice risk to reward, right? I mean, if you're catching the lower high or maybe the top rejection area and you're risking above that, it's about $2.50 of risk. If you're buying in off the level, even a little bit better. A little bit of a shorter expiration trade here with a target into 330, which would be right here, right? So you're looking at just about, you can make your entry a little bit more realistic with like the lower high. And then obviously a sweep into the gap could be more of a realistic target as well. It's about a 3R trade at worst, and that's a $5 risk, right? And I feel like you could react a little bit quicker to not lose $5 of drawdown on that trade. I don't really know how to work this thing, but that's basically what you're looking at for your trade, guys. So I would call it a 3 to 4R trade. Really nice, really easy. I took 2 and 3 weeks out on these on this trade. Not anything too special there. So we're going to move into the next trade. That trade being Apple. So I was short Apple on this day and I was short over the weekend, and I lost on the trade that was over the weekend, but it wasn't a lot of size. It was about half size. And then if you go into your 15, we got the gap up. I reshorted it on this day. I covered some, and then we got this really disgustingly gross close on crazy volume. It basically happened out of nowhere. It was uncontrollable to stop. It was 4 million volume in 5 minutes. If you go to the 1 minute, you guys can get a quick glimpse at how crazy this was. It had basically a 1% rip in about 2 to 3 minutes on the underlying, which completely cooked all of my puts. And it sent them from green to red. I shorted off of this 233 level on that day after closing the weekend swing red. And this is basically just the preliminary level, almost like almost like a head and shoulders model, where you get a lot of buildup of resistance, and then you get the break. It sweeps the all-time high, the previous all-time high, and then it fails. It pushes back lower. It fills some of these gaps beneath us. It holds that as a support, and then it climbs its way higher into where the preliminary attempt of a breakout was, where that resistance buildup was at 232 throughout the months of end of August into September, and then eventually into October, where we had the failure. So I basically was just looking for something that looked like that. And then we got a big pop into the close, and I was like, yeah, I can't hold these. I'm closing. And then we had a QQQ short that was successful. And basically, I shorted this one over the weekend as well. Cut that out for a loss. Or no, I didn't cut this one out for a loss. I held this one and added into this one. Apple was more of a loss just because it was shorter expiration. I had some further dated Qs, and then I started to add heavier size once we got up into the gap fill. We filled the gap. I thought that this was all going to be front ran a little bit earlier, where you get a major sell on the short week, and then I thought we would fill the gap, and then we would have the upside target of the bull gap as a new target for whenever the flows returned into December. But that wasn't the case. We just got a gap up, but it was still into that bear gap, and my risk was off of the bear gap, where I wanted to see a lot of defense played off of 508.69. And that's what happened. If you go into the 15, there was really no issue with holding this thing. Or if you go into the hourly, it was just one big fat failure candle. And I talked about last week how this was all just setting up to be a higher high within an internal range of a bear gap, all being distributed to then recorrect our way lower. And I still think we could be in that scenario where you have this little channel that favors, honestly, distribution happening. And I feel like some quick little tiny markdown can happen where you, like I said, you have this channel, it's within this bear gap, you have a gap beneath you, we have flows returning into December. You're getting the higher highs being sold. You're now looking like you could crack higher low structure. And then obviously the target for that would be, in mind, would be 492.21. So I sized into my position from Friday that I had from over here at 506. It popped up into about 511, 510. Not anything too bad. Was down about 25%. Not the worst thing in the world, not the best thing in the world. But my risk was still established off of that area at that gap fill, which makes total sense. And then I added some shorter expiration on the higher lows, or I'm sorry, the lower highs, which were basically off of that gap level at 508.69. It's also the or below. So this was another really nice intraday trade opportunity. And you guys have to basically understand that this is all intraday stuff because it's a short week. We don't know necessarily where the market's going to go throughout the short week. So you got to be in and out of things and getting good risk to reward, but keeping in mind that this is all just really subjective to, this is all just not necessarily the greatest environment to really be trading. You know what I mean? So when you're looking at trades like this on an intraday basis where, all right, you could start targeting the previous swing high, or you could start targeting this gap level down here. And it might have not worked, but as long as you took profits and understood that this was all just a short week, and you have to be actively taking profits if you want to, you know, get out of the week alive and green. That's how you got to treat these weeks on short weeks. You could target the overnight gap, whatever it is. I mean, this is at worst a 3R trade. So this is where I added the lower highs, and then I was like, all right, cool, overnight gap fill, and you got a little bit more juice beneath that. At max, this maxed out at about a 5R trade, and then we got the redistribution that happened on the gap level again. The next following day, which was Tuesday, into a gap up, a lot of consolidation, low volume, and then we got another sell. So with that being said, that was a really, really, really nice trade. And then my pair trade to that, and the trade that worked out really well, and the trade that made me green on this trading day was NVDA. I was green on NVIDIA, very green on NVIDIA, and then I wasn't green on the day just because I didn't scale NVIDIA. So we got into, here's the Monday session. We had a Tuesday inside bar. If you go to the Monday session on NVIDIA, this is kind of what was driving that downside, guys. You had your previous all-time high sitting here. You had gaps technically all the way down into here. This is a little hidden gap on the daily chart. And then this is also a previous low, a previous higher low. And then everything else is just basically really well balanced. You have a little hidden gap over here at 127. You have an internal base resistance over here. So there are some targets in mind, and then you had an ugly looking candle from the top end of the range on NVIDIA, and this is the same general depiction of a a lot of distribution happening internally where progression is stalling. This is the dispersion season where you have these major vehicles that were driving the markets higher throughout that whole AI theme starting to obviously give up a little bit of their gains, find some slippage off of these critical weekly levels. I want to give some credit to Bracco. He also, if you guys didn't see his tweet, make sure you go look at his tweet under my NVIDIA post. He tweeted about SMH, how it was a really ugly look. Fantastic tweet there and made a lot of sense. Really nice write-up, and NVIDIA tied in really nicely into this one. So basically with NVIDIA, this was just a major consolidation that was happening into the report. You get your higher low on the daily chart, and then you pop up into the report. You sweep these however many days, 1, 2, 3, 4, 5, 6 days of consolidation on the report, and there was a big time seller that was stepping in over here with a ton of volume that looks like almost a UTAD, and then you get your really nice relief. However, that relief was on pretty weak volume, and it was covering the majority of the imbalance that was created off of this massive seller. And then obviously the next following day you see another action of selling happening with a very weak close that starts getting slippage beneath this weekly area. So I played with this day. If you go into the daily, and I was like looking into Monday, like saying, okay, yeah, we have a major earnings candle low of risk. We have the previous high at 140.76, and I could start, thinking about buying a short on this thing with tighter risk to be able to then be able to trade this thing down into like this area at 137.15, and then my bigger target in mind was down into 132, but I sold off just because I had a decent close here. I was up pretty damn good, got about 50% on 3 weeks of time on this trade, and this was just a really nice trade. So coming into Monday, this was a beautiful opportunity to start sizing into basically just the retest at the bottom at 140.50. And then once we started to fail and get the slippage underneath the 140 psych, as well as just this big weekly level, the earnings candle low as well, that's whenever I was like, okay, yeah, this makes a lot of sense if you go to the higher time frames to start targeting down into this previous low, maybe down into this gap down here. And that's exactly where NVIDIA moved, right? We had this tiny little gap. You guys can't see it really too well, but that is your close. That's your next following day open, and there was no retest into those gaps. And then this is also just a previous daily higher low. So with that target in mind, I figured this risk to reward was really nice, but then the short week scared me and I was like, yeah, I'm covering all of this. And then it gave another opportunity to size in on this pop the next following day. And then we started to just consolidate once again with no buyer down here and really just gross hourly compression. That was failing a previous higher low, and we have gaps beneath us to target. So this was a really, really, really nice trade. And then actually, the reversion back to the upside was really nice. Whenever you guys start looking at these volume anomalies starting to step in, and then the volume really starting to get dried out here down at this level at 132. So yeah, that was NVIDIA. Short, really nice short on that one. So everything was basically a short this week. Tesla went over this one. And then that was basically it. I mean, I had a couple other trades. I sized into some INTC this week. Really nice trade over here on INTC, and I feel like this one's ready to go. This is whenever big money steps in, right? You have your entirety of the gap fill now that happened on yesterday, and then I'm sorry, I feel like it's already the weekend just because of the holidays. And then you have all of this area on the daily chart absorbed, right? We have so many tests down here. You have your fake breakdown into a gap up on the earnings, really heavy volume on the earnings, and then it got removed out of the Dow, really low volume sell on the inside bar here on November 4th, and then that's whenever we got really nice expansion. All of that expansion was just basically one big retest on the weekly chart into this previous weekly support. And then we started to fail that, right? And we started to fail that on decent volume, but it's pulling back now basically just into this gap fill down at 2332. And I feel like this would be the higher low on the daily and the weekly chart. If you go to the weekly, it's basically just a staircase of higher low by higher low. What the hell? It's basically just a staircase of higher low by higher low. It's not letting me duplicate this. I don't know why. But anyways, yeah, just higher low by higher low by higher low. Right? Very, very simple chart here. And basically what we did was we swept this previous low. We held that previous low with a nice hammer looking candle. Now, if we could find some recovery back above 24, get back above the EMAs, this is why I only have a starter. This could be a really nice trade moving forward where now you can start finding news to catalyze the accumulation to then go target up into the swing high and eventually into the gap fill at 29. So with a lot of time, this could be an insane risk to reward trade. In dispersion season, like I said, with NVIDIA selling, and if it continues to sell and develop sell-side structure, that money can rotate elsewhere, and it doesn't necessarily mean that everything is going to sell as a whole. It more or less just means that you could find that rotation into other areas, right? I'm looking for a high type flag on BA. I really love this chart. I love everything about it. Um, Obviously, we have the EMAs now curling beneath us. We have a mass amount of consolidation that led to a new low. That new low is accumulated, and now volume is drying up, but we're getting really nice momentum and speed to kick into the price action here. So we can conclude that everything with all of this consolidation and how the volume dried up into the last leg lower, that this can all just be a finalized accumulation where all of the supply is absorbed off of this range with all of the consolidation for these daily lower high attempts off of 157 and like 152.61, which is basically just this earnings gap here. And we have big volume that was stepping in on a green day here with a gap down and a recovery on October 29th, right? So we have the weekly volume anomalies, we have the monthly volume anomalies. Now it's just really up to this monthly chart of what it wants to print out for us, and then we have big upside gaps to target up into 169.60 that stretch all the way into 173.74. So that could be a really nice trade there. And yeah, that's about it for the week, guys. Everything else pretty quiet on the week. SMH, this is basically just the SMH This is basically just the SMH chart that we were looking at. We flipped it upside down. So when you look at this from an upside down perspective, this is a very bullish chart. It's a little confusing just because the colors are off, but you guys could see how this is a absolutely insane trade. Just picture the black candles as now like upside candles, and this just looks like it's kind of bottomed. EMAs were really curling in off of basically a higher low and a break of this trend, and then we were trying to get that flag expansion resistance here at 237. So when you flip it back the other way, it's very bearish looking, right? So yeah, that was SMH. Beautiful short over there as well. So yeah, that's basically all there really is to the week, guys. Nothing too special, but don't really care if I don't need to be special on a short week with a holiday. And absent flows that return in just a week. So yeah, I don't care to do anything. I don't care to be a hero on a short week like many do. So hope all of you guys have a great weekend, a great holiday, and I will talk to you guys next week.